Tesla stock is sitting at a major inflection point right now. The next big move is going to shape the trend for the next several months, and whether it breaks higher or rolls over, smart investors are already preparing. Hi, this is Ken. In today's video, I want to calmly walk you through what I'm seeing on Tesla's chart from a short-term, mid-term, and long-term perspective. We'll talk about where price is currently sitting, why this zone matters so much, and what scenarios make sense going into next week and beyond. If you already own Tesla stock or you're thinking about starting a position, this video will help you avoid emotional decisions and think more strategically. Let me start with the big picture. Right now, Tesla is not trending strongly up, and it's not trending strongly down either. It's compressing, and compression phases are usually what happen before expansion. Most big moves in the market are born out of boredom. Price goes sideways, volume dries up, people lose interest, then suddenly price explodes in one direction. That's the type of environment Tesla is currently in. Last week I mentioned that Tesla was likely entering a range-bound phase where strong trends would be difficult to form. That is exactly what we've seen. Tesla has been moving roughly between the $400 and $430 area. No major breakout, no major breakdown. That tells me something important. The market is not panicking, but it's also not chasing aggressively. This is a classic decision zone. Let's talk about where price is sitting right now. Tesla is trading around the low 400s tens. This price area is not random. Historically, a large amount of trading activity has occurred here. That means this zone is heavily watched by institutions. In simple terms, this is a tug-of-war zone. Buyers believe Tesla is undervalued here. Sellers believe upside is limited. When price spends time in zones like this, it's usually building energy. Think of it like a spring being compressed. The longer it coils, the stronger the eventual move. On the short-term 4-hour chart, we can see a subtle but important detail. Higher lows are starting to form. That tells us buyers are stepping in slightly earlier each time. At the same time, price keeps getting rejected near the 430 area. So we have rising pressure from below and a ceiling above. That's called tightening structure. Markets don't stay tight forever. They eventually resolve. RSI on the 4-hour chart is sitting near neutral territory, not overbought, not oversold, which means Tesla has room to move in either direction. No technical exhaustion is present. Now, let's zoom out to the daily chart. Tesla is currently trading below the 20-day and 50-day moving averages. That creates short-term bearish pressure. However, Tesla is still hovering near the 200-day moving average, and the 200-day moving average is still sloping upward. This is a very important distinction. Short-term momentum is cooling. Long-term trend is still intact. This type of structure is typical during healthy corrections inside broader uptrends. The key level to watch is whether Tesla holds above the 200-day moving average. If it holds, this looks like a normal pullback. If it decisively breaks below, then we could see a deeper correction. When we move to the weekly chart, the picture becomes clearer. Tesla's larger uptrend has not been broken. We are not seeing lower lows. We are not seeing structural breakdown. Instead, we see consolidation near elevated levels. Strong stocks tend to consolidate high. Weak stocks collapse. Tesla is behaving like a strong stock. Now let's talk about volume. If institutions were aggressively exiting Tesla, we would see heavy selling volume. We are not seeing that. Volume has been relatively muted. Even on red days, selling pressure has not been extreme. This suggests something important. Most of the people who wanted to sell have already sold. Selling pressure is slowly drying up. That's often what happens before price starts moving higher again. Markets usually fall hardest when sellers are aggressive, not when sellers are disappearing. So let's walk through the three main scenarios. First, the bullish scenario. Tesla holds the 410 area, then breaks above 430 with conviction. If that happens, the next logical target zone is around 450. This would represent a breakout from consolidation and a resumption of the broader uptrend. In this scenario, sentiment will likely shift quickly from cautious to optimistic. Second, the neutral scenario. Tesla continues to chop between 400 and 430. No clear direction. This frustrates both bulls and bears, but from an investor's perspective, this is not a bad thing. It allows time for moving averages to catch up and reset. Sometimes doing nothing is the correct strategy. Third, the bearish scenario. Tesla breaks below 400 decisively. In that case, we could see a move toward the 380 area. But here's the key point. That would still be considered a correction, not the end of Tesla's long-term story. Corrections are part of healthy markets. They shake out weak hands and create better long-term entries. So how am I personally thinking about Tesla right now? Short-term traders can focus on range trading, buying near support, selling near resistance, strict risk management. Mid-term investors can consider scaling in if price dips below 400, not all at once, gradually. Long-term investors should care less about exact price and more about conviction. Ask yourself one question. Do you believe Tesla will be significantly more valuable 5 years from now? If the answer is yes, then short-term volatility becomes noise. And this is where I want to zoom out. Tesla is not just a car company, it is building an ecosystem around AI, autonomy, robotics, energy, and manufacturing. Few companies on Earth are attacking this many massive markets at the same time. The stock will always be volatile, but the business trajectory remains upward. That hasn't changed. My final takeaway: Tesla is sitting at a decision point. Above 430, momentum likely accelerates. Below 400, we probably see a deeper pullback. Between those levels, patience is required. Long-term investors don't win by predicting tomorrow's candle. They win by staying invested in transformative companies long enough for compounding to work. If you found this analysis helpful, please hit the like button. I post Tesla and future tech analysis every day, so make sure you're subscribed if you want to stay ahead of the curve. Thank you as always for watching. Let's continue enjoying the future that Tesla is building. Before we wrap up, let me take a moment to introduce myself. I drive a Tesla Model Y, and at home I've installed a Tesla Powerwall, so I actually charge my car with solar energy. I truly believe Tesla is shaping the future, and that's why I share the latest news and insights here on this channel. I'm from Japan, but I want to connect with Tesla fans all around the world. That's why I also create an English version of my videos. YouTube now lets you switch the audio into your own language, so you can enjoy it in whatever language you prefer. Most of all, I'd love to connect with Tesla fans everywhere so we can support Tesla together. I also share updates on X, so feel free to follow me there and let's connect. And if you haven't already, please subscribe to this channel. I'd really appreciate it. Thanks for watching, and I'll see you in the next video.